Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's Hot Sheet, I will discuss the spring inventory, home sellers on strike, the exodus slowdown from big cities, and Manhattan real estate sales. Today is April 4th, 2023. I am Byron Lazine, and the Hot Sheet starts now. So we've been tracking the inventory very closely every single week here, and we have an update according to the housing market tracker on Housing Wire. Hit the thumbs up if you are ready. Still, no spring inventory lift. And so let's just jump right into the numbers. We've been waiting for them. We've been saying the last couple weeks, okay, hopefully we're going to get into April and we're going to have that bottoming out of inventory. Inventory has been declining consistently. We saw 1 week where it popped up active listings. And then we saw 1 week where new inventory peaked its head out, but we have not hit our bottom, and that remains true as we look at the last 7 days. Weekly inventory change from March 24th to March 31st fell from 413,169 to 410,028. So this week, this past 7 days, we fell by 3,141 on the total active listing count. Now, NAR reports overall inventory by taking active listings and combining them with the under contracts, the escrows, and they have about a 980,000 number. I like looking at this number that Housing Wire tracks much more closely, and that number because that's what is available for a buyer to go out there and actually make an offer on. That number nationwide fell by over 3,000 in the last 7 days. So we haven't seen our bottom. The bottom for 2022 was 240,000. So we're well off of last year's bottom. But that bottom for inventory came a few weeks ago in 2022. So we're still searching for our bottom. The same week last year, we actually increased total inventory nationwide by about 1,300 homes, and we're down 3,000 this year. I still have a big problem with the inventory that we have on the market. I'm finding a lot of markets as you dig into the MLS that there's inventory, that isn't something that's mortgageable, or it's just way out of any affordable price range. So, while we have an increase of inventory from last year, we're still near a real all-time low. And then I even question what we have as inventory, because you see when a good home, $300,000, $400,000, $500,000 single family home, you see what happens when it hits the market. We've been talking about it here on the Hot Sheet. You guys have been commenting on it. When those homes hit the market, it's multiple offers a lot of times, because that's the good quality inventory that the majority of the buyers are looking for. We've talked about millennials and boomers looking for the same product just this last week on Knowledge Brokers podcast. If you want to go over to that YouTube channel and check out what myself, Lisa Chinati, and Tom Toole discussed to close out the week last week, we were talking about one of these properties that Lisa saw in Boston had 87 offers. It was a suburb just outside of Boston. So when good single family homes hit the market, there's a lot of attention on those. There's pent up demand for a certain product, and there's not pent up demand for 5 million plus homes, because that's always going to be a smaller segment of the market. Just yesterday, we talked about that $300,000 home going extinct. If you missed yesterday's Hot Sheet, go look at that. Go look at those numbers. I mean, they were astonishing how many markets have just dropped 20 and 30% of new construction, 300 or lower, 300,000 or lower priced homes available in the market. They're just disappearing. They're not existent anymore. Okay. One of the reasons we don't have existing inventory is because new listings continues to plummet. Okay. So new listings this week, again, dropped along with active listings. Okay. So homeowners aren't rushing to sell because, as Housing Wire has talked about, primary residence homeowners don't act like leveraged stock traders, nor are they afraid of life like the crashing, housing market that all these people are talking about. That unwillingness to sell hampers inventory even further. Let's take a look at the charts. I have these available for you down below in the daily download. One time you sign up, you get all these sent to you every single day. It's absolutely, of course, free. Here's the inventory, still searching for our bottom in 2023. This is, of course, according to Altos Research, owned by Housing Wire. New listings, well off of the 2021 and 2022 mark. You can see that in March and in April, the last 2 years, we saw new listings come on the market. We haven't seen that yet. We saw a little bit in the beginning of March. It spiked right back down in March, came back up a couple weeks ago, and now we're trending flat. We're still looking for a real pop here of new listings in this market. We have not seen them yet. Hopefully this is going to be that bottoming week that we're looking for. Every week, I feel like we're getting on here right now and looking for the bottom that we have yet to find. As we're going to look at interest rates here in a little bit, but the interest rates, obviously, if they continue to trend lower, which we want to see, we'll obviously get more absorption, right? Here are some of the weekly numbers for you to just really internalize the difference in new listings. 2021, this week, we had 59,908. 2022, 56,774. Well, this past week, it was 49,234. Compare those to previous years, 2015, 80,000, just more like half of 2015 for new listings. 2016, 70,000. And then 2017, 88,000. We're less than, we're exactly half basically right now to, or just about half, right? From now to 2017. Crazy. The new listing data is absolutely killing us. You can put Jeremy's comment back on it so you flash it there. Austin market under 500,000 gets a ton of attention, right? So Austin's one of those markets that if you're just headline reading, if you're mainstream media headline reading, you're going to think, oh, Austin's, falling off some type of a cliff. Well, we saw yesterday, when we looked at those under $300,000 homes, they've fallen off in Austin. So this affordable price point in Austin is still going to be very competitive, despite the fact that that's one of the markets that has lost, some of their home price appreciation. Okay, Lance Lambert wrote in Fortune, home sellers go on strike. The U.S. housing market has entered into its peak annual spring season. We are here, and yet we're not seeing these listings where buyers and sellers alike get serious about their moves. Only this year, something's off. Not a lot of homes are going up for sale. So we just took a look at that, and we're going to look at it from a different angle. According to Realtor.com now, only 349,284 U.S. homes were listed for sale in March 2023. So if we look at March of 2022, it was 437 plus homes. And that 2022 was the all-time low for inventory. So in an all-time low spring market for inventory, we still saw 87,000 more homes get listed in the month of March, according to Realtor.com, last year in the all-time low inventory market than we saw this past March. Okay, far below the 480,000 listed in March 2019 before we had the panty. So sellers are just sitting on the sidelines. Lance is saying going on strike. I've heard Logan Motoshami, say that the tale of two market. I've said the Cold War of real estate multiple times, going all the way back to 15 months ago. I started talking about this because it was obvious that, okay, when they start jacking up the interest rates, homeowners are going to have less motivation to become sellers. If you're a boomer and you want to go buy another house, and you've got one of these low interest rates and you don't need to sell it because you've got cash to go buy the other house, well, I'll keep it in an investment. And so we continue to just hold on to this inventory. We're 5 years behind. On CNBC today, Barry Sternlight from Starwood Capital, they buy a bunch of multifamilies. He was on CNBC this morning, and he said it 5-6 years behind on housing inventory, talking about single family specifically. Well, he also said what's going to happen now as this inventory on the apartments comes onto the market this year that we've been talking about, they're going to stop building and producing new product because these rates are holding everything back. It's holding new development back, but it's also holding inventory back from coming onto the market. Why would they give up the 2 or 3% mortgage rate? It's one of the biggest financial perks of the pandemic. It's like printing money right now when we're sitting at 6.5, which is essentially where we're sitting at right now. So another way to look at the data we just saw, and all these charts are available for you in the daily download. New home listings coming onto the market. This is realtor.com stats. Okay. So March 2023 is so far below the line of 2022, 2019, 2017, 21, 18, or 20. We are just so far down the line. So listen, do I want to, if I'm a seller here, do I want to list now, or do I want to wait for some type of potential spike up into this range that we've seen historically? Okay. I definitely want to be a first mover while I have no competition. I've heard a whole bunch. Let me know in the comments. Have you heard a whole bunch of this going on in your office or with agents? Hey, listings coming on April 15th, listing coming on at end of April. I'd be trying to move that timeline up and meet this this situation, because you're just in a power position right now. There are some markets where we've seen, and I'll show you some of these interactive charts here in a second that won't be in the daily download, but we'll just go through them on screen here, where some markets inventory is up quite a bit, and other markets where it's just not. And then here you go, active housing inventory for sale. So while we're above this time for 2022 and 2021, we're well below 2020, this time 19, 17, or 18. Now look at this, the end of the year, what can happen. This is what happened in 2022. Look at where the inventory can go. So if I'm a seller, hey, this is where things can go. Who's to say that interest rates don't go to 7 again? I know we don't want to hear that right now here in the spring market, but who's to say that another bank doesn't flippity flop over and creates another crisis for our economy? Anything can happen right now. Everything's on, built with, straw instead of concrete in our economy right now. So I'm advising sellers, like, don't wait for this second half. And I've been saying, hey, Q3, Q4, I'm not bullish on it. If I'm an agent, I'm saving money for those quarters. If I'm working the housing market in any fashion, I'm saving money for these 2 quarters. I'm taking advantage of this right here. This is the opportunity. It's also the opportunity if I'm a seller. I'm making the most money right here, and more specifically, the front end right now, April, because those closed sales are going to happen later in the year. I just completely ruined this chart, but I'm trying to make the point here where this is the opportunity. The opportunity is March, April, and May, the end of the year, just like the trend showed us last year and the year before, looks not good. It doesn't seem promising. Okay. Anybody that believes Q3 and Q4 this year are going to be better than Q2, I'd love to know your reasons why. Drop them into the comments if that's what you believe. I certainly don't believe that. I'm hedging for a market that looks similar to last year at the end of the year. All right. If we just play this game here real quick. Active housing inventory. I'll get I'll get these charts up, and then I'm going to just refresh it here. So they've got these active or interactive charts on Fortune. Let's see if it's going to actually let me do this. Of course it's not. Probably because we have... All right, scratch that. Oh, no, here we go. All right, here we go. All right, so let's look at Austin, for example, because we just had Jeremy on here. Let's look at Austin. I'll go to the chart here. Austin, Round Rock, Georgetown, Texas. So you can see here active housing inventory for sale by month. So Austin, this is why this is a local game, right? Austin is going to be one of those markets that's not only well above 22 and 21 for inventory, but they're also above 20. So bucking the trend of what we just saw from a national perspective. Now, this is kind of grouping a large area here, Austin, Round Rock, and Georgetown. I'll give you a completely opposite example where inventory is actually even lower than last year, okay? Creating a real crisis for buyers in this particular market. There's a lot of markets, as you can see here. This resource right here will be linked down below in our daily download. It will be, it's up against a paywall here, but it will be available for you down below. Okay, so all right, Byron, it's in alphabetical order. All you got to do is find the S's. Here we go. All right. Bear with me here. I'm looking for Stamford because I was just looking at it. Maybe it's in Bridgeport. Let's see if they've got it as Bridgeport. There it is. Bridgeport, Stamford, Norwalk. You can see here that in Bridgeport, Stamford, Norwalk, Connecticut, you actually have less inventory than you did the last 2 years, right? So even last year where you had the all-time low, you're basically even with last year, 1181 in 22, 1188 in 2023. So it's one of those markets, unlike Austin, that is still searching for some inventory. Okay, so if we just pick Cape Coral, Fort Myers, you've seen Cape Coral, Fort Myers go up, but I would imagine I saw Marco Island in Naples that's not as significantly up because this is going to be impacted by the hurricane a little bit. Let's go to Marco Island, Naples, which I think I saw on here. Here's Miami. Let's take a look at Miami. Miami's up, but not up like we saw Austin, for example. I don't see Marco. I did see it before. Oh, here's Naples. Naples, Marco Island. Oh, okay. So Naples, Marco Island also up a little bit. All right. So this is a very local conversation when we look at inventory. There are places in certain pockets like the Northeast, like we just looked at, where it hasn't happened yet. Maybe it won't happen. Northeast is very densely populated. There's not a lot of opportunity to build new inventory there. Where in a market like Naples, that I'm also very familiar with, you've got more building. Let's look at New Haven, Milford, Connecticut. Okay, similar to those Fairfield counties that we looked at, where they're even with 2022. Haven't seen any inventory increase at all. We're about to talk about Manhattan. Let's look at New York, Newark, New Jersey. Okay, boom. Again, another Northeast example where you're even from 2022. In the comments, if somebody wants me to look at a specific area, I'll do that really quick. Let's look at Myrtle Beach, which has been a hot spot. Myrtle Beach up on the inventory. Okay. Let's look at some of these Florida. Okay, Florida, Ocala, way up. In Oklahoma City, up, but not way up. Let's go to Panama City, Florida. Panama City, pretty significant increase there. Phoenix up, but let's see there now. This month specifically down from the prior months, but up quite a bit. There you go. All right, so you can play around with this if you don't have the paywall. We'll put it down in the source link. Did Anybody want to see a specific town? No? All right, good. All right, let's move on. There we go. Moving on to a Wall Street Journal article I thought was relevant as we look at all these local cities and we look at the lack of new inventory coming on. We can also look at some trends that are starting to slow down from the last couple of years. The exodus from America's big cities slowed last year. New census figures show suburbs and smaller metro areas claimed the most U.S. Growth. So big cities lost fewer residents last year as more immigrants moved in, fewer people died, and more babies were born there. Okay, there you go. That's what's happening in the cities. According to new census data that shows the urban exodus that gained steam early in the pandemic is cooling. The suburbs of big cities and small and medium-sized metropolitan areas continued to claim most of the city's growth, according to Wall Street Journal analysis of population estimates released last week for the year that ended June 30th. Rural areas and small towns collectively remain nearly flat. The core counties of large metro areas had an estimated net loss of more than 800,000 movers to the rest of the country, but that was an improvement from a 1.2 million drop in the preceding year, the journal analysis shows. After a sharp fall off in immigration at the peak of the pandemic, the latest data shows a revival that has helped bolster large urban counties with about 500,000 net arrivals from abroad last year. A rise in births and fewer deaths also helped offset this number. The pandemic spurred a burst of mobility, some temporary and some potentially permanent, that accelerated pre-existing trends. All right, let's look at specifically going to the locations here. What are the trends in certain areas? We know that Florida gained the most net inbound migration in 2022. Let's look at the analysis here from the journal. New York, Los Angeles, and Chicago for large metro areas saw the biggest decline, followed by San Francisco on a decline. Detroit, Baltimore, St. Louis, Portland, Oregon, Philly, and Boston all also experienced declines. Dallas and Houston were up big, as well as Tampa, Orlando, Charlotte, and San Antonio. Atlanta, Miami, and Phoenix weren't far behind. That'll be available for you in the daily download as well, if you want to take a look at that. Going back to the journal here really quick, one other thing that did catch my eye, John Burns, which we've talked about here, John Burns Consulting. Chris Porter, the chief demographer at John Burns Consulting in Irvine, said that in the wake of the pandemic, suburban areas are likely to continue to be growth areas for employment. So employment is actually looking in suburban areas for employment, and far outer ring urban areas are likely to see more housing growth. That's where the land is available, and that's where you're seeing the construction that is happening. So in Metro Atlanta, for example, a core county of Fulton, it grew 1.1%, while four edge counties, Dawson, Jasper, Lamar, and Walton, grew at least 3 times as fast. 7 of the 10 fastest growing metro areas are all in Florida. 7 of the 10 fastest growing metro areas. So Florida had the highest net number in 2022, and this is reflective of that. 7 of the 10 fastest growing areas, metro areas, all Florida. The Village is a sprawling retirement community in Central Florida, saw the fastest pace at 7.5%, and is now home to almost 145,000 people. They just built that thing. I mean, they not just built it, but they just built basically a new community, and it's now up to 145,000. It's its own little city for retirees to go and drink their martinis and spend their retirement money, if you will. All right, going over to Manhattan real quick and what's going on there. Manhattan, CNBC reports real estate sales plunged 38%, but cash deals have hit an all-time record. A drop in sales and prices follows a 29% decline in the fourth quarter and suggests the nation's largest real estate market is correcting after a post-pandemic boom in prices and demand. Listen, their post-pandemic boom was much shorter than most places in America, in New York City. If you talk to New York City brokers, maybe we have some in the chat right now, they waited a long time for that post-panny boom. And it lasted a very short period of time, unlike other markets. Manhattan brokers took the brunt of the pain throughout the country. As we work through the pandemic, the big question for brokers, buyers, and sellers is where the new bottom will be in Manhattan. Brokers say the biggest challenge for deals is the wide gap between buyer and seller price expectations. Okay, so fell 38%. The total sales fell 38% in the first quarter. Total sales volume fell to 4.4 billion in the quarter, with 2,200 apartments and townhouses sold compared to 2,500 sales in the first quarter of 2022. This is according to Douglas Elliman and Miller Samuel report from them. The average sales price fell 5% to 1.95 million, and the median sales price fell 10% to $1,075,000, according to the report. The drop in sales and sales prices follows a 29% decline in the fourth quarter. Okay, so 29% in the fourth quarter, 38% in the fourth quarter. Suggests the nation's largest real estate market is correcting right now as we move into this spring market. And so where will this bottom be? John Miller, CEO of Miller Samuel, does believe that in quarter two we'll see a seasonal uptick, but it depends on whether the Fed holds rates where they are. Okay. As we move through whatever happens with the economy, this is where I do believe quarter three and quarter four are going to be. I do not want to be a seller of real estate in quarter three and quarter four at all. I want to be a seller in real estate only in quarter two of 2023, given the 9 months ahead of us. Brokers say the biggest challenge for deals is the wide gap between these expectations. Are you experiencing that in your market? Is there a wide gap between sellers and buyers and the expectations of where prices should be right now? Low level of inventory or unsold listings mean that buyers don't have much choice either in Manhattan. There was 7,000 homes on the market in the first quarter, slightly lower than the 5-year average of around 7,200. So not that far off their average here for Manhattan. Okay, so but maybe some of this inventory is, isn't the best inventory. I did see a report in the Wall Street. I think it was actually Bloomberg. It was Bloomberg yesterday reported that Manhattan is far behind other metro areas now in new products. So, 5 years ago, there was cranes everywhere, and they've slowed down on the construction significantly in Manhattan. What we haven't slowed down on at all here at BAM is ebooks. We've got a brand new ebook out for you. If you haven't checked this one out and need a write-off before tax time, make sure you go and grab the BAM ebook for video gear. It's video gear for every single budget. If you're looking to spend some money to offset your 2022 taxes and up your marketing game, get this guide for the best video setup options, no matter how big or small your budget is. That ebook is completely free, and it's down below. Video gear for every single budget. Do not miss that if you are looking to up your video game. Let's see if the 10-year is up or down today. Let's hope that it is down. And here we go. The 10-year is ticking up just a little bit, but we are not up over that 3.5 range that we saw a lot of last week. So 3.463 on the 10-year. We did see a 30-year actually drop yesterday under 6.5. So April 3rd, Monday, we were at 6.44. Hopefully we can stay under that 6.5 number. The 10-year is only up a tick. So be beautiful to see this kind of stick, just like we saw a tight range last week, hoping for another tight range this week. We bounced between 6.5 and 6.6 last week. If we could bounce between 6.4 and 6.5 and kind of stick there for 5 days and give more stability to mortgage lenders and the quotes that they're giving home shoppers, that would be a really good thing for the spring. And if we could only hit that bottom this week that we've been talking about in inventory, then we'd be looking in much better shape as we move into April. As you move into your day, look for The Real Word premiering on the channel here today at 2 p.m. Make sure you're subscribed so you don't miss that and you don't miss any of the hot sheets, which I'll see you back here tomorrow live at 9:30 a.m. Eastern, 6:30 Pacific time. And until then, toodaloo.